How to keep more of your profits. Tax strategies every business owner must know. The three things I want to talk about is the absolute critical essentials to how to keep more profits. It's amazing how many people just want to get out of the gate and make $5,000, $10,000 a month, $20,000 a month, $100,000 a month, but they're not looking at their profits, their margins. They don't know how to do that. So let's talk about, first of all, the foundation that's required, right? What are the legal ways to absolutely reduce your taxes down no matter how much money you make? And what are the corporate structures and tax strategies? Second, how do you use the compliance of the entity? Because this is something so different. Because you can go to LegalZoom or your Secretary of State and just get these entities at a really low cost. The compliance is critical, and then you are going to be commingling because you don't have resolutions, shareholder meetings, or all the necessary documents and compliance documents that you need. Then last, how do you avoid these costly mistakes? Because I see it over and over and over. It's heartbreaking when I see, especially a client that has high income, big W-2 job, wants to start an entrepreneurial venture, has some real estate investing on the side, and still is overpaying taxes. That is a formula for absolute success for our teams. So when you work with us, it's me and a bunch of amazing experts, from tax strategists to bookkeepers to corporate compliance to trust. I put the team together because I was sick and tired, just probably like you, of running around trying to find a good CPA, trying to find somebody who's really to activate 81,000 pages of code. So this podcast is inspired by a question that I'm going to dig in around this topic, which comes from Joe. And by the way, Ask Loral is AskLoral. It's a portal where you can ask a question, make a request 24 hours a day, 7 days a week, and anything money or business related. And if you don't have any questions, go grab one of my books. It should trigger 100 questions of validation of, am I thinking right about this? Am I doing my debt right? I mean, so many people have no clue how to do debt, credit cards, profit margins. So here's Joe's question. I've recently exited the corporate world, meaning he worked for a company. He worked there for the last 30 years and started a service-based LLC. My question is the best resources to develop a tax strategy to put more revenue in the bottom line rather than having over to Uncle Sam, meaning you're going to pay the IRS or you're going to keep it yourself. And that is just a known factor. And your bookkeepers and your CPAs are the ones who need to help manage it. They don't, because they're not trained for that. They're trained to record your history, not forecast you forward, which is where I saw a huge distinction saying, unless you forecast them forward on how to spend, they're commingling and it's never going to work. So his question is, making money has never really been a struggle for me, but maximizing how much goes into my account has been, which means just profit margins. There are so many so-called gurus spouting advice, and it's hard to discern the hustler from the mentor. Great question, because I'm the mentor. I have put together the most elaborate team around the world of tax strategists, again, corporate compliance. There's such a big piece of that. So let's dig in deeply to Joe's question, and I'm going to use it through the topic and the title of How to Keep More of Your Profits, Tax Strategies for Every Business Owner and What They Should Know. So first, let's look at your taxable income through smart business deductions. So people don't realize how many deductions you can totally categorize. Most people think that you just do the simple ones, right? Your home office, your vehicle, maybe. A lot of people don't even do your vehicle. You just do a little bit of a mileage report. We flip it. We do the whole vehicle and then expense back to the person the little bit they use on their person. Because once you're a full-fledged entrepreneur, like there's not anywhere I go that I couldn't write off as a business trip, because I'm always a walking, talking brochure for how to be a millionaire. I'm in a skincare wellness program. I'm in a huge CBD line that I love. I do some brain health. I do wine. I do a wellness home care. So I have such a variety of income sources. I can go anywhere and talk about any of those topics and write it off for business. So why put your vehicle in your name and expense miles on the business when most of you eventually, when I'm done with you, are going to be mostly in business, and then you're going to say, oh yeah, but for 10 miles I did some personal shopping, or I went and got groceries, and again, you should hire that, so you shouldn't even be doing that. So we flip it. We're very aggressive about tax strategies. We're not just doing what I call the stock and block normal, which if you have TurboTax or go to H&R Block, they only have the stock and block normal. If you're a sole proprietor, you're getting a Schedule C for taxes, and you're getting 13 to 30 deductions, not 81,000 pages. So you got to say, well, how do I activate the tax code? So for you, Joe, having a service-based business is great. So an LLC is a great starting point, but you need all the compliance documents. We'll talk about that next. So with the LLC, you'll be able to write off a lot. And then you're going to get to, say, about 100,000, 120,000. At that point, you're going to want a second company. And that is our secret sauce of what you're going to want to actually own the intellectual property, because you will have intellectual property. You'll have a database. You're going to have followers. You're going to have URLs. You're going to have assets that you're going to want protected from the people who do business at the service-based level. So around 100, 125, we'd set that company up. Then you need another company for your investments, right? And then if you're going to do a whole variety of alternative investments, you don't want to put, say, real estate and gas and oil in the same entity. You want to actually have a strategy for that. So in general, what we see, people who are growing, who want to be millionaires, they get really limited on their corporate structure, where we go pretty wide and deep on that foundation, because that's what allows you to have the amount of deductions. When you have a service-based company, you now get to do housing allowances, vehicle allowances, phone and technology allowances, wardrobe allowances, healthcare allowances. I mean, all the way to hyperbaric chambers, acupuncture, you name it, they're all deductions for you. It's part of your corporate health plan. So there's a whole strategy of getting your taxes into the single digits. It's not difficult, it's just very different. And most CPAs, we find, won't become really a tax strategist, which is look at 81,000 pages of code, know what's really the truth of today's era. Because the CPAs of the past of, oh my gosh, a home office is going to trigger an audit. No, it's not. That was something in the 80s and 90s. That has nothing to do with this century. I mean, we're a quarter way through this century. So some of them are so far behind and they don't pay attention to the code. We use the code, 81,000 pages. If you have kids, are they employed? Do you have a Roth IRA? Do you have your own health plan? Like, there are so many deductions that we love that we pack inside of this foundation. So if you want to keep the profits, the corporate structure has to be maintained as you grow and very strategically balanced by a team of 4, maybe 5. Me, number 1, is your mentor and advocate. I'm going to get you to the right tax person, the bookkeeping person, the corporate structure, corporate compliance. That's going to take 5. And then we get that foundation, because you also get corporate credit. So if you have inventories, because say you want to buy, or you're actually producing some sort of an interesting supplement line or a drink line or even books, and you don't want to put your own cash up, you get corporate credit through the way we teach you, and you can use 0% financing to actually fund, I want to go buy 20,000 books. So using 0% financing inside of that corporate structure. So number 1, we reset your foundation to really take that tax down. Number 2, we actually do the compliance. You can't just write these things off casually. You have to have legal shareholder meetings. And a lot of people, especially those so-called gurus, Joe, that are out on the internet, are going to say, oh, you're just a single member LLC. We don't want you to be a single member LLC. We want it taxed very strategically, either taxed as a partnership, very rarely a sole proprietor, S Corp or a C Corp, like how it's taxed as part of the strategy. It's not just having the LLC. Well, that requires more documents. That requires shareholder meetings. If you're going to write off your vehicle, move your vehicle to the company, that requires a resolution. If you're going to move your phone and technology, going to have another resolution. There's about 240 to 280 resolutions that you may need to activate the entire code. That is corporate compliance, that's corporate minutes, that's shareholder minutes, that's maybe you change life insurance policies. That has to be voted on. So companies can have all these deductions with the right paperwork. In fact, I used to sell these t-shirts that say, do paperwork or be poor, because you can activate all this, but you cannot do it casually, and you can't do it sloppily and commingle accounts. A few other things that I want to talk about in that commingling is your salary. It's a huge one, especially if you have your kids, is how much do you pay yourself? It's always a question in that corporate compliance bundle. So if you have an LLC, partnership, or S election, a lot of those, you're going to pay yourself a very reasonable but moderate salary. Anytime you go above, say, 48, 52,000, you've entered a new tax bracket, which means it's more challenging to get it down. So you want your companies to make the money, not you as an individual, especially if you have a W-2 like job that you actually go to. You don't need any more W-2 income, so don't W-2 yourself. You may want to W-2 your kids, meaning give them employment money and actually have a task and have it, written out. And that's as little as young as 0. Like day 1, my kids had a job. Right? And they were to be company models and corporate sponsors and corporate models of my kids' programs for money, which I've had my whole life. So very easy to then showcase my kids and then what I did with them. And my finale was writing the book I wrote in May of 2022, MakeYourKidsMillionaires.com, so you can grab that in the show notes as well. But how you pay yourself and how you pay your kids gets a little bit tangled, and we find a lot of CPAs are just scared, so they'll do the worst thing, which is they'll have you have a salary. You may already have, again, that W-2, that job. Now you have another job. And worse, you actually take distributions versus create the broad corporate structure to put all those through as expenses. The only reason you're taking extra distributions is because you need money to pay your bills, because you haven't moved from spending personally to spending corporately. So I'm going to give you 2 tickets to my Millionaire Intensive. It's critical that you actually show up. From 10 to 3, I'm going to teach you what does it take to be a millionaire, blueprints, sequences of millionaires, how to build a funnel, how to build a business model to actually make hundreds of thousands, if not millions of dollars, then go into a marketplace. So make sure you grab those 2 tickets. It's called the Millionaire Intensive. It's once a month. You can attend at any time, but really start the learning and knowledge of actually being here and understanding money, because you have to understand it. If you just let it be done to you, you end up a victim of a very segregated system, which is why I integrate it. So again, you're on my podcast. This is Loral Langemeier. Loral's World of Money Talks has been a podcast now for years and years and years. We're in the top podcast. It focuses on how to make money, how to keep money, how to invest money, how to use a team. Many times I have had interviews of amazing people. I have some interviews coming up that you do not want to miss. I mean, world leader like level interviews. So excited. But in the meantime, I'm using this platform to do deep dives into my Ask Loral campaign. I have so many questions. I want a deeper answer that, you know, many times I look at these questions and they can answer, probably thousands of you have the same questions, so why not answer in a deep dive through my podcast and a few of my other channels. So make sure you're here, you subscribe to my channel, get a download. It's every Friday, and let me know what else you want to listen to. You can text the word podcast to 775-588-9200. Again, that number to text the word podcast is 775-588-9200. You'll get all the links mentioned on the podcast sent right to your phone, and you want to listen to them and activate all of the bonuses that I've just given you. So to go to our next point, what are the most costly errors that I see is that you don't get your bookkeeping done, that you don't get that corporate foundation, you don't add enough corporate structure, and then shift your spending from out of your personal account to your business accounts. Because if you don't do that, you are legally commingling. You cannot say, I want to write off my whole phone bill and my technology bill and pay it personally. Now, in the beginning, you can use expense reports. So there's my $1 trillion tip of the podcast for today, right? So you can use expense reports to go back and forth and reclaim and redocument your year. You cannot backdate, that's illegal. But you can go back and say, this was a business expense. I didn't mean to use my personal card. I needed to use my business card. So in the first year, 2 years, 3 years, you get a little bit of grace in moving all those bills over. But then again, you've got to get the income into those companies. So what's another mistake? Is you don't put the money in because you're not actually building a company. You're just being busy. So then what do? Is you still pay them out of your personal account, even if you've legally moved them into your company name. So what you do is you don't pay them out of your personal. Your personal either gives a loan to the company or capitalizes the company. You have to get the company money to pay its bill in the deduction of the corporate compliance. And bookkeeping is critical, is what are you spending and what's your margin? A lot of you don't know what the cost to produce the item is, whether it's a product or service. And if you're not making at least a 10, 20, 30% margin, I mean, I have stuff that I do that I'm making 90% margin. So it costs maybe 10% to produce it and 90% comes to the house, which is all profit. So you have to start knowing your cost structure. You have to do a blended overhead or a blended salary or a blended just, cost structure of across the entire enterprise. So knowing your data, knowing how to look forward, I call it forecasting, not budgeting. Budgeting's like diets, no one's going to do them. They don't. It's restrictive. So I want you to forecast your spending. I want you to make so much money that you have to say what company needs to make the money, which company gets the most deductions, and how do I do it? So again, for those of you who want all of the links, because I really want you at my Millionaire Intensive, and I want you to get the ebook copy of The Millionaire Maker, is I want you to text me the word podcast, 775-588-9200. You can also ask for a one-on-one appointment. But in summary, how do you maximize your profits? Is number one, you've got to have that foundation, and you've got to have a growing foundation as you grow income. What you had at 100,000 is not with the same structure at $250,000, not the same structure at $500,000, and sure not the same structure at $1 million. So a lot of you get one LLC, just like Joe's question, and you just hold on for dear life. The only way you're going to minimize your tax structure, keep more versus pay the IRS legally, and keep more margin is you got to spread it out foundationally. which also spreads out your corporate credit. And then number two, you've got to have the compliance and the documents, the right bookkeeping and the right tax strategists. I have them for you. So just join our community and I have them. You can, that's part of the reason I put it together, is I want you to use a team who actually knows what they're doing than you guessing or you trying to educate a team that is really resistant to asking you what you're doing. I think a lot of you have found that by now. They don't know what they're doing, so they just record your history and you wonder, why isn't it working? Why is my taxes going down? Because either your foundation is not enough, your compliance isn't enough, how you pay your bills isn't enough. There's a lot of reasons, but I can see it like in my sleep. And then the last point is these costly errors. It is up to you. You can pay yourself, pay your legacy, pay your family estate, or overpay the IRS. It is totally up to you. The IRS is the greatest agency. They've given us 81,000 pages of tax code. It is fabulous, but you have to have a team that's willing to execute the absolute use of it all. And if you have any questions, I need you to go to Ask Loral, AskLoral, ask a question, make a request. I need you here on a regular basis. Subscribe, listen, and call in at any time. Again, 775-588-9200. If you text the word podcast, we'll send you the links. If you just call in and say, I want to talk to somebody about all my questions I have, you can just do it that way as well. So while you're here on my YouTube channel, we're also going to be co-promoting this through my podcast on this episode. Make sure you're here on my YouTube channel. Click that subscribe notification button. Listen to it every day, 5 days a week. If you want financial literacy and financial knowledge, this is family friendly, 5 years and up. You can listen to it here. So again, if you have any questions about any of this here on my YouTube channel, go to askloral.com, ask a question, make a request. We'll be back tomorrow with more great content on Loral Langemeier, the Millionaire Maker. Please share my channel.